Today's highlights. The Federal Reserve is secretly cutting interest rates, ETFs are fleeing, and fear hasn't bottomed out yet. How much longer will it take for Bitcoin to rebound? The Trump-affiliated USD1 is making a high-profile acquisition of OneCoin. Will regulators step in? That's the question. The government shutdown has lasted 36 days, pulling out 70 billion, and Bitcoin has dropped below 100,000. Is the market really panicking yet? November 6th, Thursday. This is the BTV Chinese channel. Where is Bian? I'm Michael. Let's first take a look at the most important data headlines from BJ 24 Hours, sponsored by NEXO. NEXO is a licensed exchange in Australia, and now it has entered the Asian market, giving the green light to Chinese-speaking users by waiving many of the complicated KYC procedures. Moreover, with assets stored on NEXO, you can stake, borrow, and even spend, allowing your crypto assets to achieve continuous, safe, and efficient growth. Scan the QR code on the screen to receive a permanent discount on transaction fees. And after the sponsorship period ends, we will hold a lottery together with NEXO, where you can win prizes ranging from USDT, Bitcoin, and Ethereum to channel merchandise. Now, let's look at today's most important headline. What's happening in the United States? It's like flying a plane blind. The government shutdown has entered its 36th day, setting a new record. As a result, the Department of Labor has stopped releasing all economic data. For the next 2 months, the market will basically have to fly blind. There will be no employment data, no inflation data, no retail data, and all real estate data releases have also been completely halted. So if the Federal Reserve cuts interest rates in December, it will be doing so in the dark. The CME's forecast data is also quite interesting. There's as much as 62% probability of a 25 basis point rate cut in December, and 19.4% of people are even betting that there will be 2 more cuts before January next year. So the market is all betting on a cut. It's a kind of dark rate cut. Meanwhile, the crypto market has also started to cool off. US spot ETFs saw an outflow of $136 million, and Ethereum had an outflow of $113 million, marking 6 consecutive days of net outflows. So it's clear that institutional sentiment has started to cool down, and the market has entered a triple fog of low liquidity and high uncertainty. That's why volatility is intensifying and sentiment is very fragile right now. But as long as the Fed really starts to cut rates and the government announces the end of the shutdown, then this liquidity crisis will immediately become the starting point for a rebound. If you don't believe it, let's take a look at the crypto market over the past day. It's been a roller coaster ride again. Bitcoin has been swinging back and forth between 102,000 and 104,000. The MVRV ratio, which is the ratio of Bitcoin's market value to its realized value, has dropped to 1.8, the lowest point since April. What does this mean? It means the price is getting close to everyone's cost basis, and it's almost at the stage where the smart money quietly starts accumulating again. Historically, every time it reaches this range, it's the bottom or the beginning of a recovery period. Looking at USDT, its supply has stabilized at 183 billion, and USDC has held the 75 billion mark, which shows that capital is still present in the market and hasn't left. So what does this current decline look like? It looks like the market is rotating and taking a breather, rather than a total capitulation. So as long as Bitcoin can hold the line between 98,000 and 101,000, the next rebound is likely not far off. After all, panic is always a necessary ingredient at every turning point. Alright, although the price of Bitcoin has been continuously correcting and dropping, let's take a look. The trading activity is actually very lively. The average daily trading volume has surged from 49.7 billion to 59.4 billion, an increase of nearly 20%. So even though the price is still stumbling downward, the emotions of buyers and sellers are actually getting more intense and more excited. That's why the $100,000 mark has truly become the scene of a tug of war. Short-term capital is charging back and forth here. As for long-term players, they're quietly building positions and buying the dip while things are chaotic and prices are low. Overall, this rebound in trading volume doesn't look like the tide is receding, right? On the contrary, it feels more like a deep breath before the storm hits. So you can see that liquidity is slowly building up at the bottom, and the market could rebound at any time. So is it a bear market? Bear my ass. Alright, please give us a like and turn on the notification bell. We're here to bring you the latest news in the Web3 world that's closest to making money. This month marks the channel's 6th anniversary, so if you join as a member, specifically as a gold member, this month you'll receive a USDT airdrop and all kinds of channel merchandise as gifts. Let's look at the news. Trump only has 3 years left before he's out of office and can't run again, right? So for the next 3 years, the crypto world will definitely have to watch Trump's moves and side with the Trump family. So you need to clearly recognize who the big capital players are, who the political heavyweights are, and who has the power to keep the crypto world, even the scam world, in check across borders. That's why Trump has become the real-life arena, the real-life laboratory. In fact, stablecoins now, to a certain extent, represent a new order in the world of cryptocurrency. Hell money is the entry point for everyone's emotions, but when it comes to stablecoins, please pay attention. This is a transaction where we have no choice but to use them, no choice but to bow to the United States. Right, so this is no longer just a game about how much market value stablecoins have or what the price of cryptocurrencies is. It has become a contest of power and trust. The Trump family's war fight is like a bargaining chip in this game, and right from the start, it's already explosive.
The Trump family's crypto project Warfight released an announcement on the X platform late at night on October 5th. They announced that as part of their plan to promote the widespread adoption of the USD stablecoin USD1 on Solana, they have purchased the Solana ecosystem's USD1 coin as a strategic reserve. The official statement emphasized that this move is not simply about hoarding coins, but rather about making their own USDE the preferred asset for traders and creators on the Solana chain.
We have our own independent stablecoin. It's called USD1. It's currently the fastest growing stablecoin in the world.
But it still pales in comparison to Tether.
We're growing quite quickly, Joe. We've reached $2.2 billion in market cap in just under 90 days. It took our competitors, like you said, Circle and Tether, about 3 and 5 years respectively to get to those numbers. And we also trade about $500 million of volume a day.
Boosted by the news, OneCoin surged sharply in the short term, reaching as high as 5 cents, but then quickly pulled back. According to public information, since its launch this year, the Trump family-backed Wi-Fi's USD stablecoin, USD1, has leveraged the family's endorsement. Its market cap has already climbed to around $3 billion.
So what exactly is this Wi-Fi.LFI? It's essentially Trump's calling card and secret weapon in the crypto world. This time, he's bringing in Solana, Radium, and BookFun. What are they up to? They're launching tokens at lightning speed, as many as meme coins, so there's always one you can buy, always one that will catch your eye. Now trading 1 point on Radium is incredibly smooth, with almost zero transaction fees. With Trump personally getting involved and leading the charge, there's definitely a lot of hype. However, trouble is bound to follow as well. So whether this celebrity crypto frenzy will spark another wave of excitement or end up crashing and burning, it's really hard to say. What do you think? Who is the real guardian of the world order? As soon as the US government shuts down, you can see it. The lifeblood of the entire globe has been suppressed for 36 days. Everyone, the markets are all collapsing, right? The Nasdaq, Bitcoin, tech stocks are all sliding down, and now even US Treasury bonds and gold have started to drop today. But if you look at those politicians in Washington, they're still arguing. No one is willing to give in. So don't think this is just a normal correction. This is a classic case of liquidity overheating. Right now, US fiscal spending is completely stuck, so hundreds of billions of dollars are trapped in the Treasury's accounts and can't get out. The market is like blood vessels being pinched off. There's a shortage of money everywhere. So to put it simply, Washington fights and the whole world pays the price.
Analysts point out that within a month of the U.S. government shutdown, nearly $700 billion in liquidity was withdrawn from the market. A shock comparable to multiple rounds of Fed rate hikes or quantitative tightening. On October 11th, the day after the shutdown, the crypto market plummeted, with liquidations reaching $20 billion. Yesterday, Bitcoin also fell below the $100,000 mark. Some warn that this could be the most severe liquidity shock since the end of 2018. Unless the Treasury lowers the TGA target balance, it will be difficult for the market to recover. If it is lowered, more than $150 billion in liquidity could be released into the market.
All right, history is like a broken tape recorder stuck on repeat. It never matches up exactly, but sometimes it rhymes. Take 2018, for example. When the Fed tightened its purse strings, the market went into chaos. Then in 2019, there was a liquidity crunch, and what happened? The US itself couldn't take it and started pumping money into the system like crazy. Now, the same story is playing out again. And what about those politicians in Washington? They're still speculating. As soon as the economy starts to sneeze, the Fed is back in its old spot, hesitating again. Should they loosen up or not? Should they tighten their belts or should they pump more money into the system? In the short term, the fate of the market hangs entirely on what the Fed says. A single sentence can stir up huge waves. In the long run, the global economy is like a mouse running on a wheel, borrowing money, printing more, and blowing bubbles, round after round. That's how the traditional economy becomes a bubble. The more you inflate it, the bigger it gets. That's why Web 3.0 and Bitcoin have found their value at this moment. It's not that Bitcoin's price keeps going up, but that fiat currencies are becoming less and less valuable. Bitcoin is still Bitcoin. There will only ever be 21 million of them. No. There are legends of getting rich overnight here, and there are also carefully crafted scams. This is a dark forest of chaotic development, but it also nurtures the spark of hope that leads to the light. The destination of faith is freedom, and the end point of consensus is equality. Sports TV takes you through the fog to see the future, and together we'll gradually become wealthier. With giants entering the field and regulation speeding up, stablecoins are aiming for a $2 trillion windfall. Meanwhile, NFT trading volume is up, prices are down, and market value has been cut in half. Can these little pictures really make a comeback? The day before yesterday, the US Treasury made a prediction. They said that the current market value of stablecoins is $31 million US, right? They predict a $2 trillion market in 3 years, so this is a huge pie. In previous reports, we've learned that major institutions like Swift and MoneyGram are all researching how to enter the world of payments and stablecoins. Standard Chartered and JP Morgan aren't issuing their own coins, but they're upgrading their blockchain payment systems. Even retail giants are now starting to accept stablecoins for payments. So now, regulators in various countries are all looking at how to bring stablecoins under their supervision. With the Genesis Act in the US coming in July and the UK stating it will follow suit, we can expect a lot of excitement around stablecoins.
The Bank of England will release a consultation paper on stablecoin regulation on October 10th, a move that stems from the consensus reached during the UK-US finance ministers' meeting in September. However, there are still obstacles to the UK's regulatory process. Previously, the Bank of England proposed limiting individual stablecoin holdings to between £10,000 and £20,000. Crypto industry groups criticize this as unrealistic and too costly.
But a global stablecoin is cross-border by nature. It can be operated in one jurisdiction, denominated in another's currency, and used by consumers in a third. And of course, the regulatory response needs to match this. The response must therefore be grounded in internationally agreed standards, just as we do in banking.
Bank of England Deputy Governor Sarah Breeden said at the SORT conference in London that the UK will align with the US on stablecoin regulation and keeps close contact with the Federal Reserve. Regulatory agencies and Treasury departments in both countries are working together on related policies. This addresses concerns about the UK falling behind in regulation.
All right, besides the United Kingdom and the United States, Canada hasn't been idle either. The Canadian government has said that if you want to issue stablecoins, you first need to obtain regulatory approval from them. Then you have to hand over real money to them, and they will provide the backstop and help you build a risk control system. So, have you noticed, for all these stablecoins that are pegged to fiat currencies, to put it bluntly, the government still holds the reins. This is completely contrary to the decentralized system we envisioned for Web3. If one day your stablecoin, whether it's T or C, gets cut off by the government, transactions are blocked, controlled, or even taken away, then you'll start longing for a truly native on-chain solution, one that is completely separated from centralized institutions in the real world and can maintain stability through algorithms. A stablecoin for crypto assets, so algorithmic stablecoins, despite their history of bad actors, will definitely become a market necessity in the future. Recently, if we look at the data, NFTs showed some signs of recovery, but in the past couple of days, they've cooled off again. OpenSea came out with some news saying that they're not content with just selling those little JPG images anymore. They want to build a full-chain trading platform. Everyone was shocked, wondering if this means NFTs are done for, or if OpenSea is about to run away. But after all, looking at last month's trading volume, there were still 522,000 people actively trading and buying NFTs on the platform. On the other hand, Animoca Brands is going even further. They're going public on the Nasdaq, aiming to let traditional capital experience the wave of Web3 NFT profile pictures. But as the saying goes, the ideal is rich, but reality is harsh. As soon as the market data came out, the whole room instantly fell silent.
According to Dune data, the global NFT market cap plummeted from about $6.6 billion at the beginning of October to $3.5 billion, a drop of 45% in just 30 days. Although October's sales rebounded to $631 million, up 13% from September, the overall market remains weak. Bitcoin NFTs and base NFTs performed relatively steadily, rising by 9% and 24% respectively, while BNB Chain and Polygon suffered severe declines, plunging by 82% and 86% respectively. Ethereum is still the largest NFT network, but it also dropped by 25.5%. Solana, Immutable, and Avalanche saw declines ranging from 31% to 35%.
First of all, OpenSea, as you know, started out as an NFT marketplace, but we've since evolved with the launch of our new platform to truly become the hub where you can discover, trade, and own anything on-chain.
NFT trading volume is up, but prices are down? Actually, it's because the community is undergoing a reshuffle. Money can't all be thrown at the monkeys, right? You have to leave some room for those NFTs that actually do something. So NFTs aren't just for showing off anymore. They're moving toward functionality. Our channel has its own NFT, which is our badge. It represents the highest dividend rights in the channel, and holders can receive up to 50% of the net profits as dividends. Right now, our NFT has already risen to 2.4 ETH. If you're interested, you can click the link above to learn more.
Ripple's president, Monica Long, personally refuted the rumors, saying, "Don't get your hopes up about an IPO. We have no such plans and no timeline for it." In short, the rumors about going public are completely baseless. The Wall Street Journal revealed that OpenAI's CFO said they have no plans to go public yet. Their gross margin is very stable and almost breaking even, and they're hoping for federal help to build data centers. YouTube is cracking down hard. Starting from October 17th, not only real gambling, but even skin NFTs will be regulated. Social gambling content will be restricted to audiences 18 and older, and game videos with overly realistic or intense scenes will also be limited. According to Kendask, Ripple's USD stablecoin OLUSD has surpassed a market cap of $1 billion in less than a year since its launch, immediately breaking into the top 10 stablecoins. This time, traditional finance has truly figured out how to play the stablecoin game. According to the VIC report, Japan has also started official mining, becoming the 11th country to get on board. Since 2020, from Iran to France, from the UAE to Kenya, more and more countries have been engaging in national-level mining.
Stay calm and composed. When people talk about you or misunderstand you, don't panic. That just means you've reached a level they can't touch. What is jealousy? It's a form of looking up to someone. Being envied is not your fault. It's because of your strengths. Some people admire your self-discipline, while others can't stand how at ease you are. Some people want to be you, but they just don't have what it takes. So they try to wear you down with words and smear you with rumors. But you need to understand clearly, true winners never win with words. They are proven over time. There's a saying, what doesn't kill you will only make you stronger. When you reach a higher position, all that noise will naturally fade away. Just look at Bao Erye, look at Sun Yuchen, look at Zhao Changpeng and He Yi, who once faced so much adversity. Now they've all become industry leaders, haven't they? But who still remembers what they did in the past if you look at all of them? So jealousy is a kind of attitude, and slander is a form of recognition, if you understand what I mean. Please give us a like. All right, that's all for today's program. Every day we help you sort through all the news in Web3. We hope you'll become a member. There are all kinds of member benefits here. We want to lead everyone to ride this bull market together and gradually become wealthier. You have to see it for yourself.